discuss on a very important subject, which is where we will be talking about how carbon markets are been shaping globally and India. And I, as Kapil Bansal, partner in EY, we have been working very significantly in this space. What I wanted to bring to notice is from a whole conceptual to its execution is already taking place in different forms and shapes. If you look at, as India, we have defined our net zero goal by 2070. But if you look from an overall global perspective, almost 151 countries have defined net zero goal. Almost 1,056 companies, which is 50% of top 2,000 S&P companies have defined that they're going to have their net zero from now till 2070, different stages of their net zero definition. Why this is important is, as you look at the word net zero requires a lot of innovation, technology, business models, and financial understanding on the techno-commercial levels to take things forward. From that perspective, carbon markets plays a very important role. And we have a very diverse panel over here. I would really like to say IEW has done a fabulous job of having a diverse panel from policymaker / regulator. Mr. Abhay is there. We have investors. Mr. Matthew is here from Climate Investment. We have industry representing Debnath from TruAlt Energy, and we have a trader who takes care of all the voluntary market, Manish. So it's a very mixed session where it would be very interesting to understand how we can achieve net zero using, instrument through carbon markets. So before I jump into this whole discussion, it is important to understand from a concept of carbon markets into how that can be designed. And in June 23, India released its consultation paper on India carbon markets. And recently in COP28, there has been very decisive drivers which were defined under Article 6.2 and Article 6.2 and their 6.4, sorry, and their further deliberations on how it can make accountability on the carbon side very focused. So with that on mind, first question I would like Mr. Abhay, from 28 June when the first consultation was released, how do you see the consultation on the response from industry, different government bodies and players and government organization is looking from this carbon markets, and where do we stand and what's the future for carbon market for us in India?
Yeah, thank you. It's an honor for me to join this panel. As you have specifically asked about the notification, so let me just inform you that the 20th June was the notification which came out defining a broad structure for the Indian carbon market. Initially, it included obligated entities as mentioned in the 20th June notification. But on the last week of December, we have included the other entities, which we call it non-obligated entities for offset mechanism, or we call it the voluntary carbon market. The stakeholder consultation paper was actually released in March 23, and we had extensive consultations, many rounds of discussions with the stakeholders, policymakers, state government, think tanks, sectoral discussions held between the potential sectors like industry, including the hard-to-abate sector. We also held discussions with the developer who can actually make the projects, and of course, including the investment stakeholders who can actually finance carbon projects. Now, globally, it is known that carbon market derives a least cost solution for the economy. And for a growing economy like India, we have the experience. We had the REC, we had the CDM, so we had a good experience. But in the last 10 years and the next 20 years, we are going to have a huge opportunity for our economical growth. And if that is coupled with the Indian carbon market, we can have a low carbon economy at the least cost impact to all the sectors. And that will benefit all the private sector, the stakeholders who are ready to invest, who can leverage the change in technology upgradation, expansion of various sectors, and of course, offering a very clean technologies, low carbon solutions, and of course, at the end, reducing the GHG emissions, much more than what India is always pledging. And of course, India is leader in this climate action. Thank you.
That's quite pertinent where we talked about that from an NDC perspective, India is way ahead of its schedule, and you very well said that we would be taking a lot of initiatives, technological innovations are happening towards low carbon solutions, and policies are being discussed at a global, at an Indian forum level with all the stakeholders. But since you mentioned about technologies and the investment platforms that are needed from the Financial Institute, I would like to ask Mr. Matthew, what kind of technologies and innovations do you feel like to invest to make sure that the least cost method as well as low carbon gets adopted towards the net zero goal?
Well, thank you very much. I hope I'm coming across audibly. Is that better? People can hear? My name is Matthew Harwood. I'm from an organization called Climate Investment. We were founded by OGCI, which is the Oil and Gas Climate Initiative. Big companies behind that like BP, Aramco, Shell. And we are running two funds which invest in climate technologies, clean tech, across a variety of different types of technology class. And we've been in India this week, both visiting the climate tech ecosystem in Mumbai earlier this week, and now at the conference. So it's very exciting to see the potential that India has to drive innovation into this whole clean tech area. And I think what we're probably most excited about in terms of the initial focus of technologies is really around energy efficiency. We have invested in sort of 40 different technologies in our funds so far, and probably about a third of them are focused on energy efficiency. And we feel that for the India market, that makes a lot of sense to start there, particularly when you're importing energy. You want to use that energy as efficiently as you can, and we see a lot of opportunity for technology to kind of support that reduction in energy consumption. But I think what I've also seen this week and visiting with startups this week is a real opportunity for India to actually innovate around some of the higher cost technologies, but do so in an India way, bringing down the costs so that they are more appropriate for the India market. I was with a startup in IITB yesterday looking at battery technology, looking at battery chemistry, and trying to really focus the battery chemistry on materials that are available in India to really drive down that cost, whether it's for electric vehicles or for grid storage, etc. So, I think that I feel this innovation wave is really poised to break in India. But these policy instruments that we're talking about, carbon markets, can really accelerate that innovation in a way that we've seen in countries like Norway, where they have strong carbon prices, and increasingly in the US, where the Inflation Reduction Act is supporting and driving innovation. So it's really exciting, but I do think the policy needs to come through and the carbon market needs to come through to add a further support to this innovation.
Right. So a lot of technological innovation, some examples from Norway and US and the policies of IRA helping to drive towards lower innovation. But then obviously these technologies are to be adopted, like the example given on batteries. So I'd like to ask Mr. Debnath, in terms of, you are building a lot of biomass related, biofuel related, investments under your company in TruAlt. What kind of support that you're looking to ensure that you gain the market share and develop not just in the Indian market? What carbon markets play an important role in helping drive your business outcomes?
Well, so for the industry standpoint, for the biofuel and the biomass usage, there are a lot of incentives required in India to explore that industry into more better way. So for biofuel, though, as and when India is in the COP28 in the last Biofuel Alliance, the government of India has announced for the more blending percentage. On the more blending, so as from the industry standpoint, whoever is helping India to get into the more blending, So today we are using 12.54. So once we move towards 20% blending, so those companies is required to be incentivized, and each company should have been given a correct measurable carbon tax measure, the benchmark to be set. So whoever will not meet, so there will be the tax is required to be imposed, and whoever is meeting the benchmark for the carbon tax credit, so those companies are required to incentivize into that terms. Moreover, into the gas in the CBG, so instead of PNG, whoever is helping India to grow the more CBG, lot of PSUs are already given the mandate to set up the CBG. So on the private space, the companies who are like us, for TruAlt, we are coming towards CBG. We are already started the CBG 3 years back, and we are scaling up now. So to scale up, we require the incentive to grow further and help India and across the global to meet the target of net zero. And the companies who are using the fossil fuel, the existing conventional gases, so those tax is required to be taken from them. And the companies who are the greener company who is in the sustainable fuel and the sustainable biofuel space, so those are companies is required to be incentivized more. So that is how is required. So that has to be the structured. Today the India is not really measurable. The tax rate, etc., is required to be fixed up, and it is a measurable target is required to be given, and which is realistic. And based on that, that incentivize. There has to be a robust incentive scheme is required to be announced.
Near the mic.
Okay.
Right. So you did mention about the scalability, the initiatives, the blending that is required. But as a project developer from a private industry, the investors, the policymakers, Manish, you play a very important role in driving all of those to execution, right? From a carbon market pricing perspective. As the data says, there are around 1,451 projects which have achieved carbon credits on the voluntary market. Almost $652 million have been achieved till date. It's always growing, and there's a exponential growth, like Abhay just mentioned, that we are looking at next 20 years of the significant growth. How do you see between compliance and voluntary market things are growing, and where would you see the support that you need to play an important role of aggregator from a developer, industry, financer, policy to help drive this industry?
Thanks, Kapil, for having me here and for the organizers. This is Manish Dabkara. I'm from EKI Energy Services Limited. We are among one of the world's largest carbon credit project developer and supplier. We are into the advisory services, trading, investments into the projects, credits, and various different arenas wherein the carbon credit investment can be done. We are into the same. So coming over the question, the opportunities in the compliance and voluntary carbon market. As of now, the compliance market which do exist across, at the present point in time, is only European Union ETS or Korean ETS. While other compliance emission trading schemes across the world are taking their shape and size, which includes India, which should be the front runner in reference to the other developing nations who are looking to implement their own emission trading scheme. So obviously, the opportunities in reference to the investments in the projects related to the accounting of the greenhouse gas emissions and for the trading of the same within the nation, further linkages between the two ETS would be the next level business opportunity into our industry. Coming over at the present point in time, voluntary carbon markets, they are exploding like anything into the removal sector or into the avoidance sector. In India, during Kyoto Protocol time from year 2005 to 2015, you can say, India was the second largest supplier of carbon credits and second largest the number of projects that were there in the international compliance carbon market through Kyoto Protocol. We were the second largest in both the terms in registration and into the supply. After 2015, if you see into the voluntary carbon markets, India is one of the largest supplier for the credits coming from the avoidance sector. So if you see most of the CORSIA compliant credits for the civil aviation or for the voluntary carbon market buyers, India was the largest supplier for the credits coming from the renewable energy specifically and the energy efficiency. Now slowly and slowly industry is moving towards the net zero goals, and so avoidance based credits are definitely in next 5 to 10 years timeline. Avoidance based credits will do get replaced with the removal based credits, and India is again a front runner into the removal based carbon credits. Coming from the nature-based solution activities, either afforestation, reforestation or biochar. And further, Indian government, various PSUs and private sector is working very aggressively for generation of removal-based carbon credits from the technological aspects, maybe direct air capture or with the help of bioenergy or other different technologies. So definitely, as of now, if you see the turbulence is happening in the international voluntary carbon markets because of the two aspects. One is the integrity, that means the quality of carbon credits. We do not have a clear definition for the same. And the another issue is related to the greenwashing issue, wherein few buyers are buying, but the whole industry is getting defamed that no one is reducing emissions and everyone is buying credits. So these two concerns, once they will do get elevated in next 3 to 6 months timeline, so various various institutions or consultants like BCG, McKinsey, various funding institutes like Morgan Stanley or Bank of America, they had forecasted that whatever the market size is there for the voluntary carbon market, which is ranging in between $0.5 to $2 billion across the globe, it will grow from 10 to $200 billion up to 2030. And obviously, once the compliance market will take its whole shape and size, will get implemented across the economy, all the sectors, deepening from the large companies to the medium and small companies. And once this CBAM will get fully implemented across the world, so the compliance markets, along with the voluntary one, should get converted into the $1 trillion industry. Obviously, if you see, EU ETS alone is very close or very near to the $1 trillion industry for the carbon markets. But once all the nations, which includes India, China, US, compliance, voluntary, it should be $1 trillion investment opportunity. The support which is required from various stakeholders, which includes investors, government, regulatory bodies. For the voluntary carbon, obviously the compliance carbon market will be driven through the compliance regime like the laws we do in India. We do have Energy Conservation Act 22. At the international front, we would be having Article 6.2, Article 6.4 under the Paris Agreement. So for the trading, obviously there is no any barrier for the trade of carbon credits which are there in the international voluntary carbon markets, but the support is also not there from the institutions which are there in India. So since we are the largest supplier of carbon credits in the international domain, voluntary domain, then once we will get the support, then further whatever the industry opportunities there, growth opportunities there, starting from $10 billion to $200 billion, definitely India would be able to achieve that specific market opportunity with maximum market share. Thank you.
Excellent, Manish. Thank you for that good statistics. We consultants are always excited when the numbers are thrown. So with this number that is given, that from 10 billion to almost 200 billion, there was another report which says if we want to become a $5 trillion economy by 2030, there is a requirement of $400 billion of investment needed in India. So obviously one of the key things is the support. We started with a very good scheme called PAT scheme, and now that PAT scheme is moving into the whole Indian carbon market. So Abhay, the question goes back to you in terms of what schemes you think will be launched, how those tenders can be built to ensure that the players gets excited about this whole carbon market. Any forward-looking point of view from your side?
Yeah, that's the essence of this entire Indian carbon market. So this proposition or this overall ecosystem which we are developing is going to have a win-win situation for almost every stakeholder, whether it's an industry, whether it is an investor, whether it's a technology provider, or even for the policy makers. And nation as a whole will gain a lot of things. And I'll try to explain very briefly that once we have the compliance market, as Manish just now mentioned about the similar to EU ETS. So in a country like India and mostly other countries as well, we have 75% to emissions coming from energy sectors. So this PAD scheme for the last 1 decade has been quite successful. We had first cycle completed in 2015-16, second cycle 18-19 onwards. Now we already covered about 55% of India's energy consumption. Now some of the key sectors, almost like 25 to 30% of energy and the emissions, we want to take it to carbon market. Now we are going to have call them as obligatory entities, giving them a very clear trajectory, which is in line with our national trajectory. Now that signals many entities. It signals the industry that yes, you have to go green in a gradual manner because the world is going green. It signals to the investor that there is going to be a requirement for investment, especially in the clean technology. The technology provider, they start finding new solutions, offering them at a competitive and affordable cost. And at the end, there is a system in place to inculcate the kind of emission reductions that can be possible. And all the opportunities are actually leveraged there. I'm heading Bureau of Energy Efficiency. Now even we are designated Bureau of Energy Transition. Because after the Paris Agreement, the role of energy efficiency has become kind of a first fuel. Because it offers almost the same kind of energy saving or an emission reduction at a 1/4 cost, which otherwise we would do it through a fuel switching. So energy transition has a 2 key levers: switching the fuel to renewables, including biomass, or reducing the energy efficiency. So with these 2 levers, the Indian carbon market will actually benefit that. Now coming back to the voluntary market, or we call it the offset market. Now offset markets is largely applicable to all actions, all potential sectors, especially like hydrocarbon sectors, where we can evolve new methodology, new technologies, which can actually give emission reduction over the conventional values or baseline actions. So that differential, and as Manish rightly said, India itself is a supplier of one of the largest carbon credit. That means the Indian economy is having many actions going on. There are many actors who are working on that, and especially in the private sector, who are working on to reduce emissions. Now all these emissions, we wanted to make it, we wanted to recognize it, we want to make it more authenticated, and as rightly said, every emission reduction, whether within the domestic market or maybe used for the international market, especially the Article 6.2, should have a credibility. The credibility means all kinds of criteria, so that our standards, the carbon credits which are issued by Bureau as an administrator, have to be recognized internationally. And that brings the possibility of investment through Article 6.2. 13 technologies have been already defined. These are all emerging technologies which have a clear additional cost. Now this additional cost can be leveraged or not fully mitigated, but at least partially mitigated by using carbon credits. And that's the Article 6 agreement which has happened in the UNFCCC. And now India is at a much better position to leverage the Article 6.2 as well. So the entire framework which we are developing will facilitate industry in the form of compliance market. It will facilitate the offset and the voluntary actors. And at the same time, industry can derive a lot of foreign investment, as you rightly mentioned, for the 5 trillion economy to come forward in the form of carbon pricing. And the last thing I want to base is the carbon pricing is there in India for the many years. But carbon pricing in the form of a carbon market has a much more and versatility and flexibility for the actors. So in that manner, the carbon market will definitely be a win-win situation for all the players. And I'm sure by end of this month, by the end of this year, we are going to roll out both the mechanisms. And by next year, we hope to start the trading itself. So that will give further confidence. And I'm sure by 2030, we are going to be one of the top 3 carbon markets in the world. Thank you.
Oh, lovely, Mr. Abhay, in terms of the timelines. You mentioned both on the compliance and the voluntary market. Again, I stick to you. You mentioned that the voluntary market you will follow by end of this year and the compliance market by end of next year. Is that my understanding correct?
So both of them will be rolled out this year, and the assessment will start by next year, especially for the
Understood.
compliance. Yeah, thank you.
And we will have our own transparent
Trading, yeah, next
trading mechanisms
By the next year, yeah.
next year. That's useful. Now, that's also an important point that in Article 6.2, there are 13 established technologies. So are those technologies, Matthew, are important for you from your investment decisions? And if yes, what is the mechanism that you use? It's grants, debt, equity, and if that, what kind of, if it is not too much of a confidential information, what is your expectations out of the players when you look for this kind of investments in these 13 technologies that have been defined?
Yeah, it's a great question, and we, as I said earlier, we do think carbon markets are very supportive of energy innovation and climate innovation. In our portfolio at the moment, we have about 40 companies in our portfolio. We have 3 that are generating carbon credits and selling those credits in different ways. We actually see through our experience with our portfolio companies how the credits, the generation of the credits can just tip a technology or a project just into the financeable category, right? And it may be there are other sources of revenue, but it might just be that generating a carbon credit can just be the additional revenue that makes the project economic, and that's the additionality that you were talking about. So what we see at the moment is the majority of these credits that are being used by the technology companies are in voluntary carbon markets, so international credits. And we're very focused on some of the new rules that are coming out around the quality of those credits. Manish talked about some of these bodies like the ICVCM, which is looking at the integrity of the credits that are generated by projects, and with their core carbon principles, which are helping define what does a good carbon credit project look like. But then on the buy side, so what are the buyers looking to use the credits for in their story, with the VCMI giving guidance about claims? What can you say if you're the buyer of a credit? And I think the 2 sets of guidance on the buy side and the sell side in voluntary carbon markets are very important, because they start to give more and more confidence to people that, yes, this is a project that I can back, and yes, this is what I can say in my story about this credit. So I think I think these new pieces of guidance that were released in COP28 in voluntary carbon markets are very good. But of course, we do need more progress on the Article 6. It was a bit disappointing at COP to see the progress that was made on Article 6, and we need to work more on that on the compliance side. But I do agree with Manish. I think there's a lot of growth potential here. I mean, $1 billion is not very large when you consider we need to invest trillions of dollars a year in the energy transition, and so that is an enormous growth opportunity in these markets. And I also, as I said earlier, I feel that India is extremely well placed to take a very strong role in some of these markets.
But I stick to, Matthew, my question about what is your investment size that you will look for and what kind of expectations?
Yeah, so we're a venture capitalist and a growth equity investor, so we would typically start at around Series A, where a company is maybe looking for $2, $3, $4, $5 million, going up to $20 million, and then right through to more mature companies that are ready for scale up, where the investment could be $100 million. They're looking for perhaps to build a manufacturing plant or perhaps do some M&A. So yeah, that's the range. So it's not seed stage, but it's certainly at that sort of Series A through to when a company may maybe perhaps be ready for IPO. That range, and we've become expert at how to support companies in at that stage of their growth in climate. That's where we focus, and mainly equity, so into the companies. So we've done some project equity, but we will probably more focus on backing companies going forward rather than individual projects.
Thank you. That's interesting, Matthew, because that gives a perspective for Debnath to, even bring, you have an investor who's looking from a Series A to Series B kind of investment. And I know biomass is one of those technologies that has been mentioned, right? So what's your plan towards your growth engine? Is it's the market, is that the policy, or is that the fund which will drive you to make you successful, and not just for you, but also this whole sector in which we are very excited as we in India has launched this biofuel alliances in G20.
So, to answer your question, this it's a kind of hybrid combination we require. We require the transparent policy, we require the transparent trading system, we require the adequate market, and obviously the respective investment to attract the global investor into India. So we require all of this in combination of this. Now the system and the policy is process and policy is more important to establish the system, and then only will be able to quantify the amount, how much investment will make into this for the carbon credit process, and how much will we give the value back to the investor to from the global or the whoever the investor comes on board, so that how much value we can give it to. So it's the ROI should be appropriate. So for that, the first and foremost most important point is the carbon credit policy, government support, and the transparent trading system. Those are the three things is required. Obviously, then there has to be, that will create definitely the market, and on that market, whatever the carbon emission we are doing from the industry standpoint, as a to scale up the business, it's not small, it's scaling up the business. The value of carbon credit has to be substantial. If these point number 1 and 2, if these two things we can do it, then we can attract the global investor, and we can justice to the investor as a company, and we can give the right ROI to them.
Thanks. No, that's a beautiful perspective to say the whole transparencies that are required. So going back on the whole carbon market on the voluntary side, based upon the data says it's an on average $4 market. And then we also hear Louis Vuitton talking about taking certain credits on $600 per ton of CO2, and it was creating a fire in the industry the moment it was talked about. Now, since you've been working, transparency is one of the things being talked about as the compliance market becomes more and more stringent with its standards, with the platform to do trading. What do you think are the important transparency parameters from the pricing standpoint of view, from a company standpoint of view, to remove, you yourself mentioned greenwashing? Is this more a societal, investors, stakeholders pressure, which is driving all of this together? One on the pricing side of transparency, other side on the whole aspect of the company to drive this forward, both from the buy side and the sell side, what Matthew mentioned.
So the compliance market, as you mentioned, definitely will get regulated. Maybe traded, obviously they will be traded through the exchanges, and maybe through the over-the-counter basis. But in the international voluntary carbon markets, major trades used to happen on over-the-counter basis. And each carbon credit in our industry, voluntary carbon markets, each carbon credit from each project is unique in nature. So for example, if the credits is originated from India for a solar power project, which is having vintage, the credit vintage is say year 2023. And if the similar technology project is based in Ghana, same solar power project and having same vintage, the prices will be different. So it is very, very tough at the present point in time to get the pure full transparency in reference to the prices, because each credit, like in our markets, the prices used to vary based on where the project is located, what is the vintage, the carbon credit vintage is there, which program, if you have chosen, for example, if it is Vera, VCS, if it is Gold Standard, if it is Global Carbon Council, and if you have gone through international renewability certificates, then the prices for the same 1 ton CO2, either measured in tons of CO2 or megawatt hour, like renewability certificate, the prices used to go very different. So in reference to the pricing for the removal-based credits, as of now, it is ranging in between around $100 to $1,500, and for the avoidance-based credits, it is ranging in between 0.5 to $30, based on which type of project is there, vintage, technology, where the project is located, the quality of auditor, quality of consultant, quality of the investor or the project owner. So there are various factors are there, and wherein the transparency in reference to or getting for the investor or for the seller, and similarly for the buyer, it is quite confusing which type of or which quality of credit they should rely on based on the budget. Budget is also one of very important aspect for the buyers. If they do have only $1 million to buy 1 million credits, and some buyer may be having budget of same $1 million to buy 5 million credits. So definitely it is going to get whatever the quality definition would be there is going to get compromised. So very soon, I believe once we'll do get very clear instruction from ICVCM related to which kind of credit will be called as quality credit. That means core carbon principle labeled credits would be there. Then similarly, Corsia will do come up with their compliance credit definition or regulations. Further, various different other things are happening, like VCMI is coming, Voluntary Carbon Market Integrity Initiative is coming up with their guidelines related to the labeling of the buyers based on their procurement strategy or emission reduction strategy. So I think in next 2 to 3 years, we may be able to get a very clear answer related to the transparency once the compliance market will be there in place in reference to Article 6.2, 6.4. India's compliance market will be there in place. Then voluntary carbon markets, which our government is planning to start, and looking forward to get its credit internationally accepted. Once this 3-4 things which are happening, or 4-5 things which are happening in the market will do get established, then more clear transparency or forecasting we may be able to do or get from the voluntary carbon markets.
Excellent. No, thanks, Abhay. So we are on the top of the hour of our presentation, our discussion, sorry, not the presentation, but definitely I was moderating to understand a lot of the question. One thing is very clear, the timelines are still 2 to 3 years. So you continue to need consultants and Manish for the work that we are doing before the transparencies, price consolidations, market happens. But I would like to summarize few of the points, what Abhay mentioned from the whole regulatory perspective. India has done a lot on the avoidance side. 55% reduction of your fuel requirement through the energy efficiencies have been achieved. And the important point is we have a definite timelines. Both the policies would have, both on the voluntary and compliance side, would have certain directions given by the end of this year, and the trade mechanisms would start from the next year. Definitely, we are one of the biggest growing globally on this carbon market side. Currently at a 10% level that we are, would be growing up to 20-30%. We would be top 3 markets where it is going from almost globally 10 billion, where India is achieving 1 billion, to almost 200 billion, and where market share will continue to grow, very well provided by Manish. And then Matthew did mention that technologies are important elements to decide his investment portfolio, both from the Series A investment in the early stage, because as a venture capitalist, as well as on the Series B from anywhere between above $100 million of investment that can be done on the equity side. On this elements, they have done investments and shown impacts on Norway, US, China. Looking forward for India market. All eyes and ears open to look for Matthew's investments in India and these technologies. And from a Debnath's perspective, he is doing a lot for India in terms of building and complete new technologies. It takes a lot of effort and dedication to enter into such a new area, which is required investment, markets, clarity on the policy sides, working towards making sure the financial investments are being done to ensure that biomass is looked as a next generation fuel for energy sector, which Abhay did mention that contribute 75% towards emission. And if we really want to become a net zero, which all we have a conviction that we will, as India, will do before time. Looking for carbon market playing an important role in doing that. On time. Thank you everyone for this discussion.